All right, let's look at the second way to diversify or to invest, and that is real estate. Real estate is one of the routes I took when I started taking my financial life more seriously. Since then, we sold most of our properties except for our principal and one rental. We'll probably sell that rental down the road where we plan to purchase an investment or a vacation property that we can easily rent out or Airbnb. Real estate has become very popular due to the TV shows and social media showing how easy it is to make huge profits from flipping a house. From my experience, there's nothing easy about flipping a house. In addition, there's constant maintenance, there's costs, and finding and keeping tenants is a lot of work and can be very stressful. And here's something the TV shows and the influencers don't tell you. Not every property makes money. In fact, you can lose a lot. Others become house poor because of their high mortgage payments. I'm going to show you a couple ways to pay off your principal mortgage faster and easier. This is described in Habit 5, but I'm going to show you right here, right now. So the most traditional way is to get your traditional loan where you usually put about 5% down and then you pay the rest back over time. I usually recommend making this as long as possible. So 30 years, not the 20 years or 15 years, but 30 years, and having a low monthly premium. This way, this frees up a lot of cash. And if you have the ability, you can put a lump sum down every year on the principal. When you're paying interest on top of interest. And the problem with the majority of Canadians out there, they are remortgaging their house every year. So they're really just focusing on the interest. They're not getting any of that principal down. If you want to pay this off faster, you have the ability to put lump sum payments right on the principal instead of just paying down the interest. Okay. Another way, which I like even more, is if you can put 20% down, you can do what's called a home line of credit. This is described a little bit more when you're reducing your taxes. What I like about this is the interest you pay on this is simple interest. And when you have a plan, you can pay this down a lot faster. When you're paying down on the principal, the interest payments go down too. So it's not necessarily the interest rate that's important. It's the amount of interest you pay. And when you're disciplined, this can be a very powerful way to free up a ton of cash and have opportunities to invest down the road. If you are not disciplined or you don't have a plan, this is a great way to keep the mortgage for the rest of your life. So it's always important to have a plan and know what you want. A third way to buy a house is often with cash, which I don't recommend. And we're going to talk about this more when we talk about the infinite banking concept. But if you act like a saver at first, put money towards your whole life policy, and then you can use that to buy your properties. This is a great way for your money to be working even harder for you. Again, we're going to be talking about this soon. Your principal mortgage should not really be considered an investment, but an effective way to reduce the cost of living. There are several ways to invest in real estate. You can physically own the properties, as I mentioned, as a landlord, or invest in properties either through REITs or real estate investing pools. The positives is this property values tend to increase over the long haul. Tenants cover the mortgage payments, which is great. The interest from the loans on investment properties are tax deductible. And we'll talk about the Smith Manoeuvre here in Habit 5 and how you can make your principal mortgage tax deductible too. But there are negatives. The negatives are property values do not always increase. There is a down payment required. There are monthly payments required. Well, if you use a loan or to purchase the property, there is a lack of liquidity, of course. And finding tenants and consummations and management can be a lot of work. And there's a lot of high fees and taxes when buying and selling properties. And trust me, this can be very emotional. Experts like Monica, pictured here, of RPI Education can provide guidance and education. And if you're interested in purchasing real estate, for those interested in the United States real estate market without the responsibilities of a landlord, consider contacting Ava Benisaki of CPI Capital. The third part of a diversified portfolio is living benefits. Living benefits ensure money continues to flow in if you're ever injured, disabled, or unable to work. To ensure you reach your financial goals and your family is taken care of in case of an accident, illness, or death, you should have a mixture of life insurance, critical illness, disability, and health benefits. Find yourself an independent health and group benefits expert that represents you, not an institution or one company, to help you find the best benefits for your needs. How to find an expert that you can trust is provided in detail in Habit 6.